What if I told you that buying a business will double your investments in 50 years? Would you like to buy such a business? Of course not. But today's prices for such assets as Apple, Microsoft, Nvidia, MasterCard are sold at exactly such prices. For an example, I will quickly analyze the shares of Apple. Its capitalization today is 3.43 trillions of dollars. But if you subtract debts from its assets, then this amount will be approximately 67 billions of dollars. And this is exactly the amount of assets that you will receive. But the most interesting thing is that this business makes its shareholders about 100 billions of dollars in net profit each year. It would take 33 years just to get back your investment, not even double it. Because when you invest 100 of dollars, doubling means getting 200 of dollars. And in this case, you buy a business for 3.4 trillion. So to get back 6.8 trillion, you will have to wait more than 67 years because the company simply does not have assets that can be sold for such amount. They exist, but Apple itself estimates them at 67 billions of dollars. Of course, the company is worth more than some 60 billions of dollars because it brings in 100 billions annually, but it began to show such results after 2020, precisely when the interest rate was at the level of 0% and inflation broke all records. Until 2020, the company brought in approximately 50 billion, which is half as much as today. So if the company can't maintain revenues of 100 billions of dollars, then you will have to wait not 67 years, but 100 years to double your investment. Yes, I understand it sounds absurd, but the math in this case is on my side. And as I already said, this situation is now not only in Apple, but also in other largest American corporations in all spheres of the economy. All this indicates that the shares are overheated. If you don't believe me, maybe you will believe Warren Buffett. He sold Apple shares and now has more than 300 billions of dollars in his company's account. To give you an idea of how much money that is, it's enough to buy the entire Coca-Cola company at today's stock prices. Unfortunately, I can't explain all the reasons why things have gotten so expensive, but I will try to cover the main ones. The first reason will obviously be inflation. Everything is simple here. If the business was worth 1 trillion of dollars and inflation was 10%, then this business will be worth 1.1 trillions of dollars. And this effect becomes even stronger when people see the company's profit increase as an achievement rather than a result of inflation, which then pushes the share's price even higher. The second obvious factor is the interest rate. When businesses and people can take out cheap loans, they have more money to spend. This helps business growth and increase their profits, often at the expense of people who are spending that money. The third obvious factor is employment. When cheap money appears, companies start building additional factories and investors start buying real estate. This leads to the fact that it's necessary to hire people who will do this and therefore pay them wages that they can spend on their needs, and therefore even more accelerating the economy and increasing the profits of companies. The fourth obvious factor was Biden's policy regarding refugees. They let in millions of illegal migrants who did not come here with empty pockets. And secondly, they received benefits in the form of financial aid. And thirdly, they created conditions for the increasing housing prices and rent. All this led to the fact that after 2020, these factors overlapped with each other, which created excellent conditions for businesses, which led to an increase in their profits, and therefore share prices rose accordingly. Today, unfortunately, I hardly see any significant factors that could support this spiral growth, but I think that people mistakenly assume that Trump's policy will lead to an even greater increase in stock prices. Let me try to explain my point. Trump more than once promised in his election campaign to lower taxes, close borders, and lower interest rates. Obviously, such statements were liked by investors, which further increased prices on the stock market. At first glance, all these are positive factors for the growth of the economy, but I always try to look 2 or 3 steps ahead, and now I will try to predict exactly how asset prices will start to fall. Let's start with the most simple. Refugees. Trump wants to close the borders, which will necessarily increase the cost of securing the borders and increasing the numbers of workers in this area. I will remind you that America has had a budget deficit for not the first year, and it is growing year by year. For example, in 2018, this deficit amounted to 780 billion, and in 2024, It's already 1.8 trillions of dollars. It is difficult to predict what consequences such actions will lead to because it will definitely reduce the flow of new refugees into the country, which in turn will lead to such positive moments as a reduction in benefits for such refugees, which will reduce budget expenses and to a decrease in real estate rental prices, and therefore real estate prices. This could be the topic of a separate video, but in short, reducing the numbers of refugees is bad for the stock market. The benefits given to refugees were spent in the United States, so that money went back into the economy. They used it to buy things like iPhones and other essential everyday products. If there are fewer refugees, it's good for the state, but not for the stock market. With fewer people spending money, companies won't be able to raise prices on products and rent as easily. Trump's second promise was to reduce taxes for Americans and for businesses. So in the end, this is a negative factor for the stock market. It is still too early to talk about this because it's not known when it will happen and exactly how they will change. For the stock market, this is a positive signal because people will have more money to spend and businesses will have more profits for their investors. But for the state, this is definitely a negative factor because they will make less profit. The budget deficit will grow even more and it will have to be covered in other ways, such as by increasing customs clearance taxes on Chinese and European goods. Such a call will have a negative impact not only on people but also on the stock market. Companies that depend on imports will be forced to raise the prices on their services and products because with an increase in taxation on such goods, which in the end can completely overshadow all the positive from additional money due to tax cuts. Because if you earn more but spend more on the same goods, does it make sense? That's why I won't consider tax reduction something positive for the stock market, because it can hurt a number of companies that depend on foreign imports, which will ultimately lead to a decrease in their profits. Trump also wants to put pressure on the Fed to lower interest rates, which is definitely a positive for the stock market. But in my opinion, this will be the final trigger for a stock market crash. I have a few ideas about why this might happen. First of all, people who bought houses during the period when interest rates were almost at the level of 0% still have not paid off their loans, which means that they are unlikely to buy a new house in the event of a decrease in interest rates. Secondly, people who bought houses during the period when interest rates were at the level of 4 or 5% did so because they expected to refinance at lower rates in the future. But we see that even though the Fed reduced its rates by 75 basis points, banks are in no hurry to reduce its mortgage rates. And this, first of all, not only reduces the number of people who want to buy a new home, but also takes away the opportunity for people who took loans at a high rate to refinance, which in rare cases can even force them to sell a house at a lower price than what they bought just to close the loans. And this is exactly what worries me. I already said that due to the reduction of refugees, the demand for housing will decrease, which will lead to both a decrease in rent and a decrease in the price of a house. Now, in addition, due to the fact that banks do not meet the expectation of investors regarding mortgage rates, housing can drop even lower, and people who, for example, bought a house for $500,000 at high interest rates will be forced to sell it, for example, for $400,000. This could really happen because if there are not enough people to rent or buy homes to cover the loans, prices could drop due to lower demand. Since mortgage rates are not falling and refinancing options are limited, ordinary people will have to bear this cost. In turn, this would affect builders as fewer people would be willing to buy new homes in such an unstable market. If people are already struggling to compete for rentals with reduced demand, new homes would only make things worse. Plus, if you check Zillow, you can already see signs of falling housing prices, which partly supports my theory. This theory can be inflated to infinity. It is no secret to anyone that we are now in a recession due to high inflation. People had less and less money for luxury goods because prices were rising, so they had to take a loan, and the loan with a small interest or a large one sooner or later had to be paid back, and therefore someone will have to limit themselves in their spending. Even large companies like Tesla have to lay off unnecessary workers in order to meet the expectation of investors, which leads to an increase in unemployment. Small and medium-sized businesses that bought goods at high prices will not be able to compete with such giants as Costco or Walmart. So even if prices decrease due to Trump's policy, small businesses will have to go into losses or reduce costs. This could lead to job losses, and if people lose their jobs, they will have even less money to spend. This will definitely hurt the stock market. I can inflate this butterfly effect for a very long time. I think I was able to explain to you why almost none of Trump's idea will be able to save us from recession. All of his actions are aimed at a positive long-term result, but I cannot say with confidence that his policies are useful in the short future. We can already see that prices are too high for a company like Apple, but if my predictions are correct and a recession hits and the company's earnings fall below today's levels, then due to asset sales by big investors, we could see prices drop to levels we have never seen before in history.